Good morning, good afternoon, good evening, everybody. How are you doing? Trust your day is going fine. And by the way, happy weekend. All right. So as we can see on my screen, this is Cadchf, 1 week time frame. I want to explain to you the trade idea. So I actually took a couple of trade, going to the downside on Cadchf. So I want to use this medium to explain those trade and the reason why I took them. All right, so I want to show you some screenshot first before we proceed to the explanation. This is the first one here. As you can see on the TradingView timestamp, this is April 3rd, 2023, right? So I actually had this marked out April 3rd of 2023. As you can see on the screen, based on structure, we have this as the lower low, the lower high, right? And then we have this as the lower low. So the structure was bearish on the weekly time frame, considering this range, right? We have this lower low, this lower high, and this lower low, right? So I was anticipating that price will give us some kind of rejection inside this imbalance, and then price can start to go down to take out this monthly liquidity. So that was what I was projecting, anticipating April 3rd, right? And today is 13th of May. Let us see. So far, price actually did, you know, what I wanted it to do, right? So price came. You can see this was where I actually had it marked, had the markup, right? Price came into the imbalance, played the open, and then rejected. And then the next week after that was a bullish week, as you can see, sold down and then came back up. And then the week after that was also what? Bearish. And then finally, we took out the liquidity by a great um, number of people, right? So, yes, price actually played out just like how I anticipated it. Now, of course, I'm not going to be taking the trade or having my entry based on the weekly time frame. What I'm saying is, I'm not going to, because I want price to reject from the weekly time frame. I'm not going to have my entry in this area here and then have, over, if I'm not mistaken, this is about 130 pips. So I'm not going to get in with 130 pips stop loss just to make, targeting this lows, that's a 1-to-1. Even all the way down here, we don't, I've not gotten a 1 to 3 yet. So I'm not going to be, trading this with a limit order straight just from the weekly time frame, right? So what I do is this is a weekly point of interest, and then when price get there, I scale down to lower time frames to look for breaker structure distribution to the downside. That way, I can get in with a small stop loss within 15, 20, 25, 30 um, pips. So max for me is 30 pips stop loss. Anything above 30 pips, I would rather wait for breaker structure on lower time frame. Yes, so this is the markup here. All right, April 3rd, this is on the weekly time frame. I had this marked out. And then this next is April 6th, 2023. That's 3 days after. I actually saw a sell opportunity to the downside, which I took. As you can see, this was on the 20 minutes time frame. Entry was at 0.67220. Stop loss 67340. And TP was at 66860. Right. So now quickly in this area here, there was an opportunity that price presented up here. Right. That was the first entry going down, which I missed. But I'm going to show you, we had the distribution as soon as price came into the imbalance, and then price started to sell from there. So I actually missed out on the first entry. And just like I always say, it's okay to miss out on the first entry. As long as you know the directional bias, we know the directional bias, we know where price is supposed to go long term. There will be multiple opportunities to get in it. Definitely, there will be multiple opportunities. taking price to the downside, which was what happened with this Cadchf pair. So I actually missed out the first entry, but I caught the second one, the third one, and the fourth one. Right. So the first one I missed, the second, the third, and the fourth I actually got in. Right. So this is the first one. No, this is the second one rather. The first one I missed, and then this is the third one. Okay, this is the third markup, right? And then the second markup, I don't have the chart. I don't have the chart link before, but I'm going to show you this. Right, you can see I had two entries here, right? So this one down here was the second um, entry for me, and then this up one up here was the third entry. Now you might be confused. How? So what happened was I actually got in here, and then something happened that I had to, adjust my stop loss, so I was running in a loss for some time, and then price got to a particular area, saw the distribution, took it, and then price started to sell all the way to the downside. So this is the second entry, and this is the third entry for me. First one just gave me 1 to 3, and then price just rejected back. All right, and then we have this last one here. So this is the last entry I took, played out very well. And just like Euro JPY, buying below opening price in bullish condition, for Cadchf, it was the same thing. I projected a bearish weekly candle. So I was looking to take, a sell above the weekly opening price. So this was the weekly opening price. Yeah, price rallied up. I saw the breaker structure to the downside. I got in and then took price all the way to the downside. All right, so I'm gonna be explaining, the trade, and yeah. So this is the weekly time frame. I've explained this. Price came into the imbalance, and then price started to reject to the downside. If we draw the FIP from the swing high, yeah, all the way down to the swing low, so definitely our entry was above 50%, right? So if we are selling, we want to be selling at premium. If we are buying, we want to be buying at discount, right? So from swing high down to the swing low, take the FIP, any area above the 50%, we want to be looking for selling opportunities, right? And then we have this imbalance, price came there and then rejected all the way to the downside, which was what I was anticipating in this area. So I was looking to play the imbalance to then get in and then hold price all the way down to capturing the monthly liquidity. Very simple trade idea, right? And again, I didn't get in, based on the weekly. So I waited for price on lower time frame. Let me see the distribution, evidence that price is going down. Then I'm going to get in with a stop loss that is less than 30 pips. Right. So the first opportunity that we missed, I'm going to show you. I didn't take this one, but it played out well. So we're going to be looking at this area. I'm going to go down to the 1 hour. All right, so let's just do this. Let me use the replay button to just down here. All right, cool. So this is the 1 hour. Like I said, this was the first opportunity that I missed. Yeah, so I think maybe 30 minutes, or rather 15 minutes. All right, this is it. Okay, so now let us monitor structure, what was going on in this area as price was approaching the imbalance. We have this higher high, higher low, higher high, higher low, higher high, higher low. Then we had what? The breaker structure. So now price broke structure to the downside here. What we could be anticipating is a possible move up. Price should give us a lower high, and then price should continue to sell all the way to the downside. Now, if we check this area very well, after this break of structure, what happened? Because now price can actually play the open of the imbalance. Price can play the 50% of the imbalance or the entire field of the imbalance. But in this case for Cadchf, as soon as price came into the open of the imbalance, price rejected, gave us the breaker structure to the downside. What this simplify is that maybe the weekly time frame is about to, start selling to the downside because we already have distribution on a much more lower time frame. The 15 minutes, the 30 minutes, and the 1 hour are already giving us the breaker structure to the downside. So yeah, we had breaker structure here. As you can see, this becomes our top range, and then we have this down range, and you can see we have what the imbalance in this area. And after the breaker structure, immediately price, gave us this bullish candle, and then the next candle came into the imbalance, and that was where the first entry was. So I didn't see this one, no, but this was the first entry for me. Stop loss, since I'm playing the imbalance, will go above here or just this area here. That's about entry would be 20, and then stop loss would be 9 pips. So about 9 pips stop loss, and then definitely 1 to 3, then holding all the way down to the weekly imbalance way down here. So that's about a 1 to um, it's about a 1 to 23. Yeah. So actually missed this one. I didn't take this one. So yes, 1 to 23 risk reward. That was the first opportunity to going down. So I missed this one, but like I said, since the order flow is to the downside, I know price should continue to sell down. Even if I miss the first entry, I can always, be on the lookout for more opportunities to go into the downside. And then on the 6th of April, actually saw this on the 20 minutes time frame. Yep. So let's go to the 6th of April, 20 minutes time frame. All right, this is it here. Okay. From the markup, I can see we have this liquidity here. So definitely, even I had a bigger liquidity in mind, which was the monthly liquidity. But seeing this equal lows also, this was like, a fast target for me. So I wanted price to come down. Let's take out this liquidity, even though price is going to reject, maybe retrace a little, and then overall start selling all the way to the downside. So this liquidity was a target for me, and this is it here. This is the liquidity below. And I can see we have this as the daily opening price. So price opened on the 6th of April. This is the daily opening price. So this was the first entry for me. So this was the daily opening price here. And my entry was just based on this imbalance here. So something like this. Entry 67 to 20 to 20, 67, 340. 67. That was a 12 pip stop loss. You can see this is below 30 pips. Like I said, I always like to get in entries, maximum stop loss for me, 30 pips. So 12, 15, 25, these are all good. As you can see, 1 to 3, right? So I was risking 12 pips to make 36 pip. Price came all the way down, gave more than 1 to 3. Took me out because I had my TP at this 1 to 3. So I had a loss to recover. So I went full 1 to 3, even though I knew like price was going to sell down. But I'm happy I did because you can see as soon as price gave 1 to 3, went back up, came down, and then just finally, went up. So if I had this entry at break even or I had the stop loss where it was, this would have actually resulted in a loss for me. So I was happy to have closed this trade at full 1 to 3. And then price rejected all the way back to the upside. And then price started to sell down again the more. And then the next, so I've explained this one, played out well. The liquidity was captured. And then the next trade I saw was on the 4 hour, taking price all the way to the downside. I remember clearly. Yeah, so this was the markup I do not have, but I remember where the entry was. So this was it. Yeah, was in this area. So now I saw the structure on the 4 hours. We have this low, this lower high, and then we have this low. So I was looking at this as the top range, and then we have this as the down range. But now there were two imbalances in this area. So there was this first imbalance here, this imbalance, this first one here. See? And then the second imbalance all the way up here. So now my second entry was based off the second imbalance. But then I got in based off the 4 hour entry with a stop just at this high here in this area. Just like you can see from the screenshot I sent. I think my entry was 900 and stop loss was just up here. At this candle that started the imbalance, that's about a 22 pip SL, and I was aiming for full target monthly liquidity. So now what happened was I got activated and price started to reject, and then it didn't reject much as you can see, and then going into, I think candle closed, going into the next day, yeah, going into the next, let me see, Friday. Yes, so that was on Friday. So I actually got in on Friday, and then the market closed, and then market opened on Sunday. The market opened on Sunday. We had a spike down, and then price bought all the way to the upside. And then going into Monday, we started to have bullish price action. So what I did was I had to adjust my stop loss. I looked at the market and was like, price might actually come to this imbalance here. Maybe the institution want to play this imbalance before taking price overall to the downside. So what I did was I increased this to about, I think since maximum is 30 pips, just put it at 30 pips up here. And then I saw that this 30 pips was inside this imbalance. So I didn't want to take a loss because I have seen this based on, price came into the imbalance and I started to see some kind of rejection even before price got to the imbalance here. So what I did was I just put the stop loss all the way up here, about 46 pip. So what that means is I'd already increased the amount I'm risking on this particular trade now. And then this trade was running in a loss, just like how I showed you. And then price, I was monitoring it closely. Price then bought all the way to the upside, came into the imbalance above. So price came into this imbalance up here. I was on the chart, and then I saw what price swept this, liquidity, gave us distribution to the downside. And then this was the third entry for me. As you can see, I was even late because price had already played the imbalance. So since I was late, I just had to put the entry there again, hoping that the institutions would take price up one more time before bringing price all the way to the downside. And there was some short-term liquidity to be captured. We have this one here, and then some down, and then the bigger one, the monthly liquidity. So this was on the 30 minutes. This was the third entry for me. So remember, this was in drawdown. I had to increase the stop loss all the way up here because I was like, since price did not play this, maybe it's coming for this imbalance up here. So I do not want to take a loss. And then overall price starts to sell all the way to the downside. So I was okay to have increased the risk because I had another objective in mind. So price came into the imbalance, and then on the 30 minutes, I saw the distribution to the downside. Yes, this exactly. So as you can see, I had it marked out. You have this higher high, this higher low, this higher high, and then price broke structure to the downside. And then I was looking at price rejecting from this imbalance here. This is April 18th, 2023. As you can see, breaker structure. So the best place I could get my entry was to look for opportunities to sell above the opening price for the day. And then I got my entry up here, and the entry was 67, 670.80. So this was the entry. Stop loss was just above this high, 671.70. So that was a 9 pip stop loss. Okay, 9 pip stop loss. And I was aiming for price taking out this weekly liquidity down here. And then played out well. So this gave 1 to 13, right? Entry was at this place, 9 pip SL, 117 pip take profit. Played out well. Monthly liquidity was captured. And then the entry I had before, it was good. I increased the stop loss. Price came into the higher imbalance, gave us the distribution. And then it took a while, but came into profit. And then this one also hit target, capturing the monthly liquidity. So this was the Cadchf opportunities I was able to see going to the downside. If you have any question, please let me know in the comment section below. Have a good day. Bye.